And we're going to go into some of the charts now and have a look at some of the intricacies that we're seeing, some of the flow, some of the price action, the technicals, the patterns, and let's go into that's a setup. Okay, let's chat gold. We get a lot of requests for people to talk about gold, and the setup looks absolutely phenomenal in my opinion. We're not quite there yet, Blake, but you've got that kind of rounded bottom. I've got a weekly chart there because it gives great oversight. We can trade in and out of those positions. We're trading off daily charts as a swing trade, or whether you want to take that really down and go into some sort of day trades or scalps. Overall, yeah, you've got to look at the rhythm, the feel of the weekly, and you've got that, what looks like a cup and handle, but we've got a kind of broadening megaphone that comes on the right-hand side. We've broken through 1830, which is the recent swing high. The bulls are in control of this, but it does need to break that downtrend, those series of lower highs that we've been seeing. It comes in around 1850. If we can get a close above that specifically on a weekly basis, you know, for me, that's when the trend followers come in. The CTAs, the systematic guys, are going to start dripping length into this market. Gold is underloved. You know, it's under-owned at the moment. You've seen that in the positioning. You see that in the optionality. A break of 1850 and you know, the swing that we got into late or Q4 of last year, yeah, then it trends and it starts trending high. Gold is a hedge against a policy mistake, not an inflation hedge, a policy mistake. And that's why people are moving, and that's why it's diverted there. I love this setup, but it needs to complete and it needs to go through 1850. What are your thoughts there, Blake?
You know, here's the thing about gold, that you throw out the number 1850, but the 1850 level is the 78% retracement of the that would be November highs to December lows. So really a breach above that on a closing basis, as you pointed out, I think really puts at least the 1900 level back in play. But I love basing patterns like this. I love cup and handles. I love accumulation like this. So I'd agree. And you know, gold has every reason from a macro perspective to be going higher. You know, just from inflation expectations to rates moving higher, gold should be moving higher. And maybe this is, you know, this is the early stages of it making that move. So I like it. Yeah,
I like it too. And I think, you know, maybe it's a relationship about Bitcoin and people, you know, wanting Bitcoin over. I think that's kind of broken. Silver though, I haven't got a chart of silver, but go and have a look at the daily chart of silver. It just looks beautiful at the moment. I know it's the high beta current cousin of gold, but if gold's going to go up like this, you know, I think silver's going to go up at a high base. So yeah, I think this needs work. It needs to complete, but this has to be on everyone's radar at the moment.
All right. Well, you know, my next chart I wanted to bring up to you guys is the dollar CAD. And the dollar CAD, you know, a lot of people, and I've seen it all over FinTwit, everybody's looking at this dollar Canadian head and shoulder pattern. And, you know, if there's one thing that I've learned over the last 25 years of looking at charts and analyzing charts technically, is that if there's one pattern that's going to fail on you, it's the head and shoulder pattern or the inverted head and shoulder pattern. So what I mean by that is I don't think it's going to complete. Actually, I see it more as a wedge. And you can see that wedge has allowed us to make a move down to the ascending trend line that comes in right around the 125, 124.50, 60 level. And you'll notice that today we made a lower low, but then closed higher. We closed above the 200-day moving average, and that's a 50% retracement. And, you know, being the 50% retracement and the 200-day moving average and a possible double bottom false breakdown, I think the risk is that we move back up towards 126. I think the dollar CAD is taking its cues off of crude oil as well, because the turn in the CAD happened when crude kind of peaked intraday as well. So I think that's this dollar Canadian setting up. Now, if it does break below 124.50, that's a pretty clear indication that we're going back to 123 and possibly the low 120s, you know, like 121, 120 and a half. Yep. So if you're looking to get long, this is probably the place to do it. What are your thoughts here,
The other thing there you've got to look at is the Bank of Canada meeting coming up on the 26th for you guys, 27th, really early in the morning. Market's pricing a 65 or 62% chance that the Bank of Canada raise rates. If they don't raise rates, you're going to get 126. You know, they're going to, you know, that CAD pricing's going to reprice, and yeah, dollar CAD's going to rally. And of course, you've got the Fed meeting as well the day after. But yeah, I mean, obviously, we're looking at 62% chance there that the Bank of Canada raise. If they don't raise, that dollar CAD's going up. Obviously, if they do, there might be a test of that trend line. But I mean, you've got so much different support levels to look at as well, and that's something that yeah, a lot of people should be looking at. But yeah, down to rates, and you know, if they don't raise, then yeah, you're going to see some big vol, and dollar CAD's going to move up. And talking about trend breaks, well, let's have a look at what's going on in the R2K, or the Russell 2000, or what we call the US2000 here at Pepperstone. And you can see on the trading view chart there that this has held a range. We talked about this a couple of times on the show in 2021, but you've got this trading range that had been really holding since February. We saw that failed breakout in November. Yeah, a lot of people getting bullish, including myself, on the back of that, and it obviously proved to be a failed breakout or a fake out, that it came back to test the range. You know, you can see that on the B, that we had that little bit of a rally, but we've now broken the range. And again, the two questions you've got to ask yourself here is, are we going to see a similar situation, obviously inversely to what we saw in around letter A, where we obviously had the failed breakout? Is this going to prove to be a failed breakout to the downside on this trading range in the Russell, or is this going to start bear trending? Of course, you know, for people who are trend following, people who are trading on the momentum, you know, we can look at short positions at the moment, and then obviously if you get if it comes back, you get stopped out, and you obviously don't lose a lot of money. That's the idea here. But if this starts going, you know, this could be trading down at 1900 fairly soon. That's something we are looking at. It's a bit oversold. You can see that from the various oscillators. I've got the rate of change, I've got the RSI, and where it sits in its Bollinger Band on that third oscillator there. But you can see this is broken out of its trading range at the moment. A lot of people are talking about this one now. Is this about to go down to 19,000, or are we going to see a failed break? You know, I quite like short positions at the moment and getting stopped out for a small amount. What do you think, Blake? You got any ideas on this one?
You know, I just think that these false breakouts lead to breakdowns. I love it when traders get caught wrong-footed, because it usually swings the other direction. I mean, you know, look, I'm a trader. I'm a predatory trader at that. That's what we all do. So when you catch the majority of the market caught off sides, that's a good trade. And so to play this to the short side makes a lot of sense to me. And so I think that, you know, your lower levels where you have A, B, C, D, or X in this case on your chart, I think that's a realistic expectation for this next move.
Yeah, I think this is one that's been on a lot of people's radar, getting a lot of notice. So yeah, I think everyone should be taking note of this range break. The longer they are, those ranges, the more meaningful they are when they do break down.
Well, speaking of ranges, let's take a look at the Kiwi. Now, this isn't necessarily a range, but what I can tell you is that's a bear flag pattern, and it has all the characteristics of being a bear flag setup. The reason why is we've seen this consolidation. This consolidation's really lasted since December of last year, and we have barely been able to reach the 38% retracement. That is very characteristic of a bearish consolidation. And so all I'm waiting for now is a break below 60.6740, 6740. And that's going to open up the downside. And I think there's a lot of people that are bullish Kiwis expecting for a much bigger move higher. And I'd hate to be the one to say this, but we break 67 cents. I think we're going to see 64 cents before we get anywhere near 70 cents. So what are your thoughts here, Chris? I mean, this is a pretty bearish price action in the Kiwi.
Yeah, I mean, I've been looking at Aussie Kiwi. I know a lot of people hate that cross because it's slow beta. It's it doesn't really move as aggressively as you would do in Aussie dollar, Kiwi dollar, Kiwi yen, for example. But that's pushing right up to the top end of its range. And whilst I'm not necessarily like a huge Aussie bull, I think that if that breaks through, that could be a really interesting trade from the long side. But I will say fundamentally, the next RBNZ meeting doesn't happen till the end of February. You know, it comes out on the 23rd of February. The market is already pretty excited. We've got a 27% chance that we get a 50 basis point hike, so 127% chance of a hike effectively. Now, I don't think they're going to get a 50 basis point hike. I think we're going to get 25 at the most there. So fundamentally, you've got to see a bit of rates pricing coming out of the Kiwi. It tells us that potentially we're going to go down a little bit there. It's probably a risk-off story. But yeah, I mean, absolutely, the price is always true when you're trading currency markets. It's the aggregation of flow. If it breaks, it breaks through that pattern, the flag pattern, it goes down to, I'll be looking to go short. If it breaks then at 67, I'll probably be ramping that up. Maybe it goes down to 64. I probably wouldn't trade with a target, but, I think that the price action needs to be respected. I think that's a great setup to look at today. So, yeah, really interesting one. Thanks for bringing it up.